Good morning and welcome to today's financial market briefing. Let's start with last night's key signals from Wall Street. The three major U.S. indices closed flat, but futures are pointing higher across the board, with tech leading the way. Nasdaq futures are up 0.72%, S&P futures up 0.42%, and Dow futures up 0.19%, suggesting a positive open ahead. Among individual names, Nvidia gained 2.13%, Tesla rose 0.69%, and the QQQ ETF climbed 1.46%. On the risk asset side, Bitcoin dropped 2.57%, EBIT fell 2.39%, and MicroStrategy took a bigger hit, down 5.14%, putting the crypto sector under pressure. On the macro front, the 10-year Treasury yield held steady at 4.45%, while the VIX edged up to 16.86, a 2.8% increase from the previous day. While still within the normal range, this suggests some tightening in market sentiment. Looking at the global macro picture, the 10-year yield is stable, indicating a temporary balance in liquidity conditions as markets wait for the next catalyst. The VIX, though normal, is rising as investors begin pricing in uncertainty around upcoming tech export controls and the FOMC meeting. The US dollar index has slipped below 101 to 100.77, which is supportive for emerging markets and risk assets, and could encourage capital flows back into non-US markets. In commodities, WTI crude fell 1% to $75.45 a barrel. Despite Saudi Arabia's production cut announcement, oil prices declined, reflecting that market concerns about slowing global demand outweigh supply constraints. Gold, on the other hand, rose 0.9% to $4,190 an ounce, as safe haven demand picked up amid escalating tech restrictions and trade tensions. So where does this leave us? The global market is showing a mix of risk-on and risk-off sentiment, leaning cautiously toward risk-on. U.S. tech futures are pointing higher, which is positive, but the tightening tech export controls and rising VIX are capping any broad risk appetite expansion. The key failure condition to watch is if Nasdaq futures turn negative or if the VIX breaks above 18, which would signal a shift to risk-off. Now let's turn to the Chinese yuan and external conditions for China assets. The onshore dollar-yuan rate is at 6.7675, while the offshore rate is at 6.7861, with the offshore yuan slightly stronger. The exchange rate remains stable with little depreciation pressure. This stability supports foreign investor appetite for shares, but the uncertainty from escalating tech restrictions could offset some of that positive effect. U.S.-China tech tensions are heating up again. The U.S. is preparing to update export restrictions on HBM chips to China, directly pressuring the AI computing and semiconductor supply chain. At the same time, China announced it will strengthen export controls on strategic metals like gallium, germanium and antimony starting July 1, which in turn benefits related rare resource sectors. These two events will drive sector divergence in today's A-share market. For today's A-share open, we expect a lower start. The semiconductor and AI computing chain will be under pressure from the new HBM rules, weighing on the indices at the open. However, if U.S. futures continue to gain before the cash session opens, with Nasdaq futures up more than 1%, or if northbound capital sees net buying exceeding 10 billion yuan in the first minute, we could see a flat open instead. Looking at the A-share market specifically, the Shanghai Composite is expected to trade in a range of 4070 to 4100 points, with a slightly weak bias. The Chi-Next index faces greater downside risk due to the drag from heavyweight chip stocks. If the Shanghai Composite reclaims 4100 with volume above 600 billion yuan, that would be a sign of strength. A break below 4070 would confirm weakness. On the sector front, strategic metals and minor metals are the most certain winners today. The logic is straightforward: China's export controls take effect July 1, providing clear policy catalysts and upward price expectations. The domestic substitution and self-sufficiency theme also offers some trading opportunities, but with much higher volatility than strategic metals. On the risk side, the semiconductor and AI computing sectors are the most vulnerable today. The U.S. restrictions on HBM chips directly hit industry expectations, and individual stocks face valuation downgrades and selling pressure. We recommend staying away for now. As for northbound capital, given the stable yuan but escalating tech tensions, outflows are more likely than inflows today. Watch the Shenzhen Stock Connect net flow direction in the first 30 minutes for confirmation. Here is our core call for the day. Treasury yields are stable, the dollar is weak, and tech export controls are escalating. Strategic metals and semiconductors will diverge, and the A-share market will continue its structural rotation. Our probability assessment is 30% for an up day, 40% for a sideways day, and 30% for a down day. Thank you for watching, and we will see you in the next session.